welcome to Weekly Economic Insights, your weekly dose of events and news that you need to know to manage your personal finances. I'm Ridhima Bhatnagar. Let's begin with all the stock market action. Let's begin with the Indian stock market action. Nifty 50 was up by 73.4 points, almost 0.34% compared to last week. It closed at 22,096.75. Sensex was up by 188.51 points, about 0.25% compared to last week. It closed at 72,831.19. DII's net bought securities worth rupees 19,351.62 crores and the FII and the FPI's net sold securities worth rupees 8,365.53 crores. Let's now talk about the big global news. The Federal Reserve held its meeting between 19th to 20th of March and was chaired by Jeremy Powell. Let's bring you the key takeaways from that meeting. The Federal Open Market Committee, or the FOMC, voted unanimously to leave the benchmark rate unchanged in the target range of 5.25% to 5.5%. Now, in this meeting, the chair, Jeremy Powell, said there is a possibility of rate cuts in the future, but it will depend on the incoming data. Due to this, we did see impact on the US stock indices. Dow Jones and Nasdaq appreciated by 2% after this announcement on the 20th of March. The meeting, interestingly, also highlighted that inflation has decreased over the past year but remains high, and inflation is targeted to return to 2%. In some more global news then, this news is coming in from Japan. The Bank of Japan has ended negative interest rates, ending the unorthodox measures including yield curve control. What does this mean? The central bank abandoned its negative interest rate policy with the first rate hike in 17 years, heralding Japan's return to conventional monetary policy and signaling confidence that the country is finally leaving behind years of deflation and economic stagnation. Now, the BOJ has set the short-term interest rate between 0% to 0.1% and said its main policy tool will now be short-term rates. As per the bank's own analysis, prices are going to be stable around a 2% increase per year soon, so they are going to stop using the negative interest rate policy and the yield curve control. This, according to the bank, will keep the interest rates low for now to make sure prices stay stabilized around their target. The bank also might raise rates later if needed at all. Let's now bring you some data from back home. Let's begin with data as far as the gross direct tax collection is concerned. As per provisional figures of direct tax collections for FY24, as on 17th of March, the net direct tax collections are at rupees 18,90,259 crores compared to rupees 15,76,776 crores in the corresponding period of the preceding financial year, that is FY23, which means an increase of 19.88%. The gross direct tax collection for FY24 registered a growth of 18.74%. The advanced tax collections for FY23-24 stand at rupees 9,11,534 crores, which shows a growth of 22.31%. Let's bring you some regulatory updates now. The AMFI has released the results of stress tests conducted on mid-cap and small-cap schemes last week. Now, stress tests assess a fund's ability to handle sudden redemption requests. Earlier, you had the SEBI chairperson raising concerns about overvaluation in small and mid-cap schemes and directed mutual funds to add an additional disclosure. This included stress tests as well as liquidity analysis. Now, the current stress test design involves estimating how long it will take to liquidate 25% and 50% of the portfolios on a pro rata basis. Next up, banks have been asked to check mis-selling. Now, Vivek Joshi, who is the Financial Services Secretary, has asked banks to check mis-selling of insurance products and to protect consumers' interests. In an interview to the PTI, he highlighted that the Department of Financial Services has been getting multiple reports about fraudulent and unethical practices that are being adopted by banks as well as life insurance companies to procure customers. Let's bring you some news from SEBI now. SEBI has eased the FPI norms. Why has this happened? Now, SEBI on Wednesday released a circular easing disclosure rules for FPIs. Earlier, FPIs holding more than 50% of their India assets under management or AUM in a single corporate group were required to make additional disclosures. SEBI has now removed this requirement if the conditions that we're just going to read out are in fact met. The apex company of such group has no identified promoter. This information will be made available to the public by depositories. FPI's holdings should not be more than 50% of their Indian AUM after disregarding the apex company. The composite holdings of all such FPIs that meet the 50% concentration criteria, excluding FPIs that are either exempted or have been disclosed in the apex company, are less than 3% of the total equity share capital of the apex company. If any of these conditions are breached, then FPIs will either have to make additional disclosures or then realign their investments below 50% threshold within 10 trading days. The SEBI has also released its monthly bulletin. Let's bring you some key highlights. Resources worth Rs 20,869 crores were mobilized during Feb 2024 from equity issuances compared to Rs 9,134 crores during Jan of this year. Now, the PE ratio of S&P, BSE, Sensex and Nifty also rose to 24.8 and 22.7 respectively in Feb of this year compared to the previous month levels. The gross notional turnover of equity derivatives reached Rs 8,594 lakh crore on NSE, declining by 3% month-on-month, whereas it increased by 22.8% on the BSE. The total number of demat accounts is about to cross the 15 crore mark, reaching 14.8 crore in Feb of this year. The equity segment witnessed outflows of Rs 3,195 crore in the secondary market and inflows of Rs 4,734 in the primary markets. Net inflows were Rs 1,539 crores. Let's now talk about the auto space. Tax on hybrid vehicles should be reduced in future. Well, that's the word that's coming in from Minister Nitin Gadkari. Speaking at the Rising Bharat Summit 2024, the Minister of Road Transport and Highways said the GST rate for hybrid vehicles should be reduced to 12% from the current 48%. He also added that hybrid vehicles are 60% reliant on electric operation and have minimal pollution output. Well, with this, we've reached the end of this video. Do not forget to like and share this video. One Finance will bring you every week top news and updates that impact your personal finances. Do follow One Finance.